are with a completely calm oil market. Do you think it's complacency or a reality that oil markets are reflecting at this juncture because they don't really see escalation in Mideast tensions right now and the situation going out of hand?
I think it reflects reality, quite frankly. I think, $80 to $90 a barrel is really where fundamentals are pointing for oil right now. We've obviously seen the tit-for-tat attacks and retaliation by Iran and Israel. But I think if you look at certainly Iran, it's chosen to try and de-escalate the crisis. The US clearly wants to see the crisis de-escalate. And while there remains, ongoing risks, I think there's limited chance that we'll see, things really, get out of hand and any physical disruption to oil supply. So I think, it's unlikely we're going to see supply disruption at this stage. And I think really, $80 to $90 a barrel is reflecting, what supply demand's doing, what inventories are doing, and it's a fair price for oil in the market right now.
And how does that set in with the outlook on demand? Because the projections have been varied from the IEA versus OPEC plus.
Yeah, so OPEC have been far more bullish on demand relative to the IEA. What we saw last year was exceptional demand growth, 2.5 million barrels of growth, a lot of it coming from China as we saw that rebound from COVID. This year, we've got a slower China economy. We don't have the COVID bounce back. We're seeing growth really slowed down quite significantly in China. So we're looking at, 1-2% growth in terms of refined product demand this year. Globally, we expect demand growth to be, somewhere around 1.2, 1.3 million barrels a day. So almost half of what it was last year. So, the COVID bounce back is really, behind us. I think what we've got going forward is a slower China economy and also increasing EV penetration within the auto fleet, which is, starting to crimp demand for transportation fuels such as gasoline.